Hello again, welcome back to another video. Bit different to your usual financial YouTube video. That there's no particularly good production quality in this video. Yeah, no great producers, it's just me just pressing play. A few questions about the indicator that I use, and the questions have been around why does it print a box where it prints a box. I need to know. So I thought I'd do a quick video and explain why. So first and foremost, we have zones of liquidity, and you'll see these on a chart. They're everywhere. They're sort of above highs or above lows. There can be trend line liquidity. Basically, where you see wicks forming at the bottom can be places where there would be liquidity, because people would place their stop orders underneath there. If you were going long here, you might put your stop underneath this point, and obviously all a stop is an order in the market, so it's called liquidity. And you find them under these areas here on trends. The buy side liquidity is the other side, it's at the top. So the market seeks these areas out. That would be buy side, and this could be, let's say, sell side liquidity on this side. Go with me on this. What price will do is it'll do whatever it needs to, within this, and then eventually it might take out, let's say, sell side liquidity, but with a big imbalance candle. And by imbalance, you might know it as like a fair value gap. I call it an imbalance or a market inefficiency. It'll shoot down, take out all this liquidity down here underneath all these lows, but it'll take it out with some force. It won't just meander its way down. It'll take it out with some force, creating an imbalance. And then so that's stage one. And then what I'm looking for is a rebalance. So price to come up, fully rebalance that area. Then I'll get a box. Then I'll draw my 40% mark, and I'll put a limit order in, and hopefully, we'll go to the last close for target one, body close. And that is essentially how it works. I'm going to show you on the chart. I've written a few bits down here as well. This is sort of the important part. This is what I do. So here's a trade I took earlier. There is a box that formed here, and the reason why this box formed here is because first and foremost there was a liquidity sweep, and it was here. There's lots of liquidity here, all sitting under this zone down here. Liquidity, 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 all under there. If you go further back to the left, there's a bit. I mean, we don't quite take this at this point, but there's all this liquidity here that we take as well. So we take the liquidity, but you might go, well, you took some liquidity sort of here. We took some liquidity here, but we didn't take it with a forceful move down, creating an imbalance, which we did here. You can see it's a forceful move down, and we've got an imbalance, or you might want to call it a fair value gap here. That's an imbalance. Can you see? So we created that imbalance. All right. But then we created a rebalance. And by rebalance, what I mean is the market has come back up and filled in this efficiency. Can you see? It's completely filled this efficiency in here, rebalanced the book. And by doing that, we then get the box. And then we take the box and we go from the low to the high, which would have been there. Could have been there, actually. And we take a limit. Well, no, it'll have been higher, won't it? I took the order from there. So where will it have been drawn from? Oh, yeah. It's been drawn from the bottom there up to roughly around about the top here. And I'll have taken my limit order there, and I'll have gone, for starters, to here, and then I'll have targeted here. And that is essentially it, going for the nearest internal body close. The same happened a little later on. We got a liquidity sweep. So we've got lots of liquidity all sat along here. Gets taken, as you can see here. All this liquidity here gets taken by this impulsive move to the upside, creating an imbalance. The imbalance is then filled, as you can see. It got filled here, and then we took the trade in and out. The reason why this didn't work, this did take liquidity here with an impulsive move, but at this point, this efficiency wasn't filled. It was filled here, but that's too late. I like to see it. I don't like to go too far back. It needs to be something that's happened in a short period of time. So there's two examples there. My indicator, when I switch it on, I won't need to look at this. I won't need to figure out, have we taken liquidity? Have we done this, that, and the other? It will just automatically draw the box where that happens. Then we can go around and literally just mark out top and the bottom of the box and put a limit order in at the 40%. And that is how my indicator works. And that is how I trade NQ daily. And it's all explained within 5 minutes. Any questions? Pop a comment down below and I'll see you on the next video.